Hi and welcome to munshigiri.com. In this tutorial, we are going to talk about the revised clause 49 of the listing agreement. Now, the various topics that we are going to cover under this tutorial are: the first is the applicability of clause 49, and second are the issues under the revised clause 49 of listing agreement. So, starting with the first topic we have is the applicability of clause 49. It says that the clause 49 is applicable to all companies whose equity shares are listed on a recognized stock exchange. So, the clause 49 is applicable to all the listed companies. Okay, so and the compliance with the provisions of clause 49 is optional for the following companies. Companies having a paid up capital less than or equal to 10 crores and net worth less than equal to 25 crores as on the last date of previous financial year. It is mandatory for all the listed companies. However, compliance is optional for following companies. Compliance is optional for following companies. First is companies having paid up capital less than or equal to 10 crores and net worth less than or equal to 25 crores. This is as on the last date of previous financial year. Last date of previous financial year. And second is companies whose equity share capital is listed exclusively on the SME and SME ITP platform. This is companies whose equity share capital is listed exclusively on SME and SME ITP platform. SMEs, small and medium enterprise, and medium enterprise, and ITP is Internet Trade Protocol. So the conclusion we draw from here is that for companies having a paid up capital greater than 10 crore or net worth greater than 25 crores, these companies have to mandatorily comply with the provisions of clause 49 of the listed agreement. And second is that the clause 49 is not applicable on the unlisted companies. So this was the applicability clause. Coming to next topic that we have is issues under the revised clause 49. This was applicability. Second is issues under revised clause 49. Okay, so the various issues that we are going to address under this is: first is the board of directors, audit committee, management of subsidiary companies, disclosures, management discussion and analysis, information to shareholders, and CEO CFO certification. Starting with the first topic that we have is board of directors. I think I should take up another page. No, I'll start with this only. First is board of directors. Board of directors. So we are going to address 4 things under the board of directors. These 4 things are: first is composition of board of directors, composition of board of directors, compensation of non-executive directors, board meetings, and code of conduct. So the first is the composition of board of directors. It says that the board shall have an optimum combination of executive and non-executive director. That is, first point under this is A point. Let's say board shall have an optimum combination of what? Executive and the executive directors and non-executive directors, and at least, this is non-executive directors, at least one women director. They should with at least one woman director. Next point under this is the 50% of the directors shall be non-executive directors. That is 50% directors, non-executive directors. And third point is regarding the chairman and the independent directors. So let me come down to the second page. All right. So the C point is that if the chairman of the board is a non-executive director, then at least 1/3 of the board should comprise of independent directors. Now it says if chairman is non-executive director, then at least 1/3 of board should comprise of independent directors. And if the chairman is an executive director, then at least half of board shall comprise of independent director. Half of board shall comprise of independent directors. Now in condition number C that we saw, that is if chairman is a non-executive director, then and he is either promoter of the company, related to promoter, or person occupying the board level position or one level below the board, then half of the board shall comprise of independent director. So this 1/3 shall be replaced by half. In that case, what is the condition? Let's look at it. Condition is if chairman is non-executive director, and he is either promoter of company, related to promoter, related to person occupying the board position, person occupying board position or one level below board, or position one level below the board, then in that case half of the board shall comprise of independent director. Half of the board shall comprise of independent directors. So this was about the composition of board of directors. Coming to the second point under the board of directors is the compensation of non-executive director. Compensation of non-executive director. All fees, compensation payable to non-executive director shall be fixed by the board. That is compensation which includes all the fees and the plus the compensation that needs to be payable to the non-executive director that we have covered here shall be fixed by board. Board means the collective body of the board of directors of the company. Okay, it shall require proper approval of shareholders in the general meeting. Prior approval of shareholders is mandatory. Prior approval of shareholders is not required for payment of sitting fees, that is if this is within the limits prescribed under the Companies Act 2013. That is for payment of sitting fees, prior approval of shareholders is not required. This is only in the case when the sitting fees paid is within the limits prescribed under the Companies Act 2013. Coming to the third point under Board of Directors, we have is board meetings. Now there shall be at least 4 board meetings in a year with a maximum gap of 4 months between any 2 meetings. Board meetings at least 4 in a year. Maximum gap between 2 meetings can be 4 months. This was point A. Second point under this is the board shall periodically review the compliance report laws and the regulations applicable to the company. What will the board do? Board shall periodically review compliance report laws, and regulations that are applicable to the company. And a director can be member in not more than 10 committees across all the companies in which he is a director. So this was compensation. We are done with it. This is the third point, that is board meetings. Under this point, the C point we are covering here. Now the C point is a director can be a member in not more than 10 committees across all the companies in which he is a director. Member in not more than 10 committees. And he can be chairman in not more than 5 committees in across all the companies in which he is a director. D point is chairman in not more than 5 committees. Now every director shall give annual information to the company about the committee's position he holds in other companies and notify changes when such changes take place. E point under this is director to furnish annual information to company regarding what? About the committee's positions held by him to committee positions, the committee positions held by such director in other companies, and notify changes when they take place. And while calculating the limit of 5 or 10, that is 5 committees, chairman in 5 committees and member in 10 committees, the private companies and non-profit making companies shall be excluded in the limit. That is for calculating limit of 5 or 10 private companies and non-profit making companies shall be excluded. Now the fourth point under Board of Directors we have is the Code of Conduct. Look here, this is Code of Conduct. The board shall lay down a code of conduct for all the board members and the senior management of the company. Now who will lay down? The board. Code of Conduct. Board shall lay down Code of Conduct, COC's Code of Conduct. For whom? For all the board members and the senior management of company. The Code of Conduct shall be posted on the website. Code of Conduct shall be posted on the website of the company. The Code of Conduct shall include duties of independent directors as laid down in the Companies Act 2013. COC shall include duties of independent directors. Duties of independent director as laid down in the Companies Act 2013. And next is annual report on corporate governance must contain report of code of conduct and compliance. Let's write it down over here. Annual report on corporate governance must contain report on code of conduct and the compliance. So this was about the board of directors, that is first issue we dealt under the clause 49 of listing agreement of SEBI. Now if you look at, there are three terms that have been used under this clause. So first is an executive director, second is a non-executive director, and third is an independent director. So it becomes imperative to know about these terms. So let's look at these terms one by one. First is a executive director. Executive director. Now executive directors are the persons who are in employment of the company, who possess the in-depth knowledge about the company, take active part in the day-to-day activities of the company, have a personal interest in the company. For example, the managing director and the whole-time director. Now who are the executive directors? Here these are the persons who are in employment of company, possess in-depth knowledge about company, take active part in day-to-day activities of company, take active part in day-to-day activities or day-to-day affairs of company, and have personal interest in the company. They have a personal interest in the company because their remuneration directly or indirectly depends upon the successful running of the company. So they have a personal interest in the company. For example, your managing director or the whole-time director of the company. Next we'll look at is the non-executive director. Now non-executive directors are the persons who are not in employment of the company. They have a diverse experience and background, not intimately connected with the company or concerned with the company except through attending the board meetings, and the examples are the nominee director or the professional director. So let's just write it down quickly. Non-executive director, these are the persons who are not in employment of company. They have diverse experience and background. Not intimately connected with company. Not intimately connected with company except through attending the board meetings, and the example is nominee or the professional director. Nominee or the professional director. Third is an independent director. Third is independent director. Independent director. Now it specifies that independent director shall mean a non-executive director other than nominee director of a company. Now who is an independent director? It's a non-executive director other than other than nominee director of the company. Okay, now this non-executive director who is a person of integrity and possess relevant expertise and experience in the opinion of board. A point under this is who is a person of integrity and possess relevant expertise and experience in the opinion of board. Is not or was not the promoter of the company or related to any promoter, related to any person occupying management position at the management level or one level below the board. So B point under this is not or was not promoter of company or related to promoters or related to any person occupying management position or one level below the board. C point under this is such independent director is a person who, apart from receiving director's remuneration, does not have any material pecuniary relationship transactions with the company promoters, and list has been provided under this clause. Now it says who apart from independent director means a non-executive director who apart from receiving director's remuneration does not have any material pecuniary relationship transactions with the following persons, that is transactions with the company, the promoters, directors of the company, senior management, holding company, subsidiary company, and associates. During current financial year or 2 years immediately preceding the current financial year. Okay, so here we are learning about who an independent director is. So till now we have covered 3 points under this. That is, it says independent director means a non-executive director other than the nominee director of the company who is a person of integrity and possess relevant expertise and experience in the opinion of the board of directors of the company. Who is not or was not a promoter of the company, related to promoters or related to any person occupying management position or the position one level below the board of directors. And independent director means a non-executive director who, apart from receiving director's remuneration, does not have any material pecuniary relationship transactions with the company, promoters, directors, senior management, holding company, subsidiary company, associates during the current financial year or 2 years immediately preceding the current financial year. So these were the 3 points. Coming to the next point, and this is who is an independent director who has not been an executive of the company in immediately 3 preceding financial years. This is D point, and page number 4, point number D under the independent director. Now it says has not been executive of company in immediately 3 preceding financial years. E point is not a material supplier, or customer or service provider or service receiver, or lessor or lessee of the company. Now the reason why these things are excluded, because if he is a supplier of the company, customer or service provider, in that case that person will not be independent. And now here we are talking about the things covered in the definition of the independent director, that is who can be an independent director. Now the next point under this is not substantial shareholder of company. Is not substantial shareholder of company. Substantial shareholder means a shareholder owning greater than 2% of block of voting rights. This was the board of directors, audit committee under clause 49. And our first issue that we are going to take up under this is the composition of audit committee. First is composition of audit committee. Now audit committee shall have minimum 3 directors as members. Minimum 3 directors as members, and 2/3 of the members of audit committee shall be independent directors. Next point is all the members of audit committee shall be financially literate and at least one member shall be financial expert. So this was first point under composition. Second point is minimum of 3 directors, and out of which out of the total directors, 2/3 of the directors shall be independent directors. All members of audit committee shall be financial literate, and at least one member shall be financial expert. Chairman of audit committee shall be independent director. And company secretary of the company shall act as secretary of the committee. Company secretary of company to act as secretary of committee. So this was about the composition of audit committee. Coming to the meetings of the audit committee. Second is meetings of audit committee. Now audit committee shall meet at least 4 times in a year. Audit committee shall meet at least 4 times in a year. And not more than 4 months shall elapse between 2 meetings, and maximum gap can be 4 months between 2 meetings. This was about the meetings of audit committee. Next is the quorum of audit committee. Quorum shall be 2 members or 1/3 of members of audit committee, whichever is higher, and there shall be minimum of 2 independent directors present in the meeting. This is quorum. Quorum shall be 2 members or 1/3 of members of audit committee, 1/3 of members of audit committee, whichever is higher, and there shall be minimum of 2 independent directors present. 2 independent directors present. Next is the powers or the functions of audit committee. This is powers or functions of audit committee. First is to investigate any activity. To investigate any activity. Seek information from any employee. Seek information from any employee. Next is obtain outside legal or professional advice. Obtain outside legal or professional advice, and to secure attendance of outsiders with relevant expertise if necessary. Secure attendance of outsiders with relevant expertise if that is necessary. Next is the role of audit committee. Role of audit committee, first is to review the financial statements, to review the following things. To review the following items. First is the annual financial statements and the auditor's report. Auditor's report, quarterly financial statements before submission to the board. Auditor's report and quarterly financial statement before submission to the board. Statement of uses or application of funds raised through an issue and statement of funds utilized for purposes other than those stated in prospectus or document or notice. That is application of fund raised through issue utilized for other than stated in prospectus. An audit committee shall review these things. Third is auditor's performance, independence and effectiveness of audit process. It shall review the auditor's performance, independence and effectiveness of audit process. The audit committee shall review adequacy of internal control system, adequacy and internal audit function adequacy. And the adequacy of the internal audit function. Next point is the audit committee shall review the performance of statutory and internal auditors. Shall review, to review the performance of statutory and internal auditors. And the audit committee shall review the functioning of the whistleblower mechanism. Shall review the functioning of whistleblower mechanism. So under the role of audit committee, first thing that we have covered is the audit committee shall review these many things. Second is the audit committee shall approve certain things, and we will see what all things that the audit committee shall approve. That is, first was, this is to approve. What will the audit committee approve? The audit committee shall approve the payment of statutory auditors for any other services rendered by them. Payment of statutory auditors sorry, payment of statutory auditors for any services rendered by them. Subsequent modification of transactions with related parties and appointment of the Chief Financial Officer. Subsequent modification of transactions with related parties, and the third point under this is appointment of Chief Financial Officer. Appointment of Chief Financial Officer. Now, first was the audit committee shall review these things, second is the audit committee shall approve this thing, and third is the audit committee shall discuss the following things. To discuss significant findings of internal auditors and follow up thereon, and the nature, timing and extent of statutory audit with auditors. To discuss, what will it discuss? First is significant findings. Significant findings of internal auditors and follow up thereon, and second is nature, timing and extent of statutory audit with auditors. Audit with auditors. And there are some miscellaneous points under this, under the role of audit committee. This is the miscellaneous points, or you can say others. What it shall do is it shall recommend the appointment, remuneration and terms for appointment of auditors of company. This is recommend, appointment, remuneration and terms for appointment of auditors of company. Terms for appointment of auditors of company, and scrutiny intercorporate loans and advances, and value the undertakings or assets of the company where necessary. This is scrutiny intercorporate loans and advances, and the third point under this is value undertakings or assets of company where necessary, or assets of company where necessary. Okay, now there are certain items that are to be mandatorily reviewed by the audit committee. So right now we discuss the role of audit committee, that is it shall review the following things, it shall approve the following things, and it shall discuss the following things. Now what we are going to cover is that these are the things that should be mandatorily reviewed by the audit committee. This is mandatorily review by audit committee. There are 5 things. First is management discussion and analysis of financial condition and result of operations. So what is the first thing? This is MDA. MDA is management discussion and analysis of what? Of financial condition and the result of operations. Second is the transactions with the related party. Related party transactions. Statement of significant related party transactions submitted by the management. Third, it shall review the letter of internal weakness. Letter on internal weakness. The management letters or the letters of internal weakness issued by the statutory auditor. The audit committee has to mandatorily review the letter on internal weakness issued by the statutory auditors. The fourth is the internal audit report. This is internal audit report. Internal audit report related to internal control weakness. Related to internal control weakness. And the fifth and the last point under this is Chief Internal Auditor, the appointment, removal and the terms of remuneration of Chief Internal Auditor, CIA, that is the appointment, removal and terms of remuneration of Chief Internal Auditor. So these were the 5 things that were required to be mandatorily reviewed by the audit committee. Now we have covered 2 things. First was the board of directors. Under the issues, first was the board of directors, and second thing that we covered was the audit committee. The third that we are going to cover here is nomination and remuneration committee. Now the board of directors have to constitute a nomination and remuneration committee, and now this nomination and remuneration committee shall have at least 3 non-executive directors and at least half shall be independent, and the chairman of such committee shall be an independent director. This was all about the nomination and remuneration committee. Let's quickly jot it down. Third point, nomination and remuneration committee. Remuneration committee. Now who shall constitute this committee? The board of directors. Now it says board shall constitute nomination and remuneration committee, and it shall comprise of, the nomination and remuneration committee shall comprise of at least 3 non-executive directors and at least half shall be independent, and chairman of such committee shall be independent director. So this was about the nomination, the remuneration committee. Coming to the next issue under clause 49 is subsidiary companies. Fourth is subsidiary companies. Now about the subsidiary companies, the clause 49 says that at least 1 independent director on the board of directors of holding company shall be director of a material non-listed Indian subsidiary company. First point under this is at least 1 independent director on the board of directors of holding company. 1 independent director of holding company shall be director of a material non-listed Indian subsidiary company. It means that unlisted subsidiary whose turnover or net worth is greater than 20% of the consolidated turnover or the net worth of listed holding company and its subsidiary in the immediately preceding financial year. That is, material non-listed Indian subsidiary company is whose turnover or net worth exceeds 20% of consolidated turnover or net worth of the company in the immediately preceding financial year. So this was the first point under the subsidiary companies. Second point is audit committee of holding company shall review the financial statements, particularly investment made by the unlisted subsidiary company. Audit committee of holding company, what it shall do? It shall review the financial statement particularly investment made by the unlisted subsidiary company. And the minutes of board meetings of the unlisted subsidiary companies shall be placed in the board meetings of holding company. That is, board meeting of subsi shall be placed at board meeting of holding company. Fourth point under this is, company shall not dispose of shares in its material subsidiary which would reduce its shareholding to less than 50% without passing special resolution in general meeting, except where such disinvestment is made under a scheme of arrangement duly approved by the court or tribunal. That is, company not to dispose of shares in subsidiary which would reduce its shareholding to less than 50%, which reduces shareholding to less than 50% without passing special resolution in general meeting. However, if such disinvestment is made under a scheme or arrangement duly approved by the court of tribunal, then the company can do so. The fifth and the last point under the subsidiary companies is, the company shall not cease the exercise of control over subsidiary without passing special resolution in general meeting. That is, company shall not cease the exercise of control over subsidiary without passing special resolution in general meeting. Next comes the MDA report, that is management discussion and analysis report. So this was the first point that we covered under the the following things that are to be mandatorily reviewed by the audit committee. So the first that we covered under this was the management discussion and analysis report. So we are going to cover the management discussion and analysis report in detail over here. Okay, this is fifth point and this is page number 8. So alright, this is MDA report, that is management discussion and analysis report. Now the contents of MDA report are as follows. Contents of MDA report. First is the industry structure and the developments in the industry. Industry structure and developments in industry. Second is the SWOT analysis, that is the threats and the weaknesses, SWOT analysis. Third is segment wise and product wise performance. Segment wise and product wise performance. The outlook of the company, that is how it wants to see itself in the future. The risk and concerns of the company, for example the arrival of a new competitor in the market, internal control system and their adequacy. Internal control system and their adequacy. The developments in the human resource. developments in human resource, and discussion on financial performance with respect to operational performance. Discussion on financial performance with respect to the operational performance. So this was about the management discussion and analysis report, and we looked at the contents of the management discussion and analysis report. Next is the whistleblower policy of the company. This is the 6th point, which is whistleblower policy. Now this says that the company shall establish a visual mechanism for directors and employees to report concern about the unethical behavior, actual or suspected fraud, etc. What it requires the company to? It requires the company to establish a visual mechanism. And what for? For the directors and employees to report concerns about the unethical behavior, actual or suspected frauds. That is, for reporting on actual or suspected frauds, etc. Frauds, etc. Now provide adequate safeguards against the victimization of directors or employees who avail this mechanism. Then provide direct access to chairman in exceptional cases and post details of such establishment on the company's website and the board's report. So in first point is it should establish a visual mechanism. Second is provide safeguards against victimization to the directors and the employees who avail this mechanism, and direct access to chairman, in exceptional cases, and post details of establishment on company's website and the board's report. Establishment, this is to be posted on company's website. So this was about the whistleblower policy. And coming to another issue under the clause 49 of the listing agreement, we have is information that needs to be given to the shareholders. So this, I believe, is the 7th point. Okay, after the whistleblower mechanism, this is information to shareholders. Information to shareholders. Now, in case of appointment of a new director or reappointment of a director, the company shall inform to the shareholders the brief resume of the director, the nature of expertise of the director, and name of the companies in which such person holds directorships and member of committees of the board. It shall also provide the quarterly results and presentations made by the company to the shareholders and the formation and working of stakeholders relationship committee. So 3 things that are required to be informed to the shareholders. The first is the case of appointment of new director or reappointment of a director. That is, appointment of a new director or reappointment of a director. In that case, the brief resume, nature of expertise, and name of companies in which such person hold directorships. Holds directorships and membership of committees. and membership of committees of board. So this was the first point. Second point is, under this is quarterly results and presentations made by company. Results and presentations made by company. And the third is formation and working of stakeholders relationship committee. Formation and working of stakeholders relationship committee. For the redressal of grievances of shareholders, debenture holders and other security holder. Another issue under clause 49 we have is CEO CFO certification. That is the 8th point. CEO CFO certification. Now the CEO or the CFO of the company shall certify on the following matters to the board of directors. CEO or CFO to certify on following matters. They'll certify to the board of directors. And the following things that they will certify are, the first one being that they have reviewed the financial and cash flow statements of the company, and these statements do not contain any material untrue statement or omit any material fact. So first is that they have reviewed the financial statements and the cash flow statement, and these statements do not contain any material untrue statement or omit any material fact. Second is that the financial statements present a true and fair view of the company's affairs. That the financial statements present true and fair view of the company's affairs. Third is, that is, no transactions entered by the company is fraudulent, illegal or violate the company's code of conduct. Transactions entered by the company are not fraudulent, illegal or violate code of conduct of the company. Fourth point is that they accept the responsibility for establishing and maintaining the internal control. That is, acceptance of responsibility for establishing and maintaining internal controls. The fifth point under this is that they have disclosed to the auditors and audit committee deficiencies in design or operation of internal controls, if any, and the steps taken to rectify the deficiencies. That is, the CEO or CFO have certified in the following matters: reviewed financial statements and cash flow statement. The financial statements present the true and fair view. The transactions are not fraudulent, illegal or they violate the code of conduct of the company. Acceptance of responsibility for establishing and maintaining the internal controls, and they have disclosed to auditors or the audit committee, disclosed to auditors and audit committee deficiencies in design and operation of internal control, if any, and steps taken to rectify the same. So in this point we covered the CEO or CFO certification, that is the CEO or CFO of the company shall certify on the following matters to the board of directors. Coming to the last issue under the clause 49 of listing agreement, we have is the disclosure on other matters. It says disclosure on other matters. Under this, the first point we have is the transactions with the related parties. This is transactions with the related parties. That is related party transactions. Now these transactions with related parties shall be disclosed individually. Material transactions and the transactions not at the arm's length price. The related party transactions with the related parties transactions shall be disclosed individually. That is the material transactions and the transactions not at arm's length price. Now, all the related party transactions shall require prior approval of audit committee. All related party transactions require prior approval of audit committee. However, audit committee may grant omnibus approval for related party transactions proposed to be entered by the company subject to the following conditions. Now, audit committee may grant omnibus approval for related party transactions proposed to be entered by the company subject to the following conditions. Now the conditions for this are: such approval must be in the interest of company. Such approval must be reviewed at least once. Or approval shall be reviewed on a quarterly basis. And such approval must be valid for 1 year only. And such approval must specify the following things. The first is the name of related party, nature of transaction, maximum amount of transaction that can be entered into with such related party, and second point under this is indicative base price or current contracted price, and formula for variation. Now we have come across a term over here, that is omnibus approval. Here is it, omnibus approval. Now what does the term omnibus means? Omnibus approval means approval of two independent matters together. That is approval of two independent matters together. An omnibus approval can be given only for transactions whose value are below 1 crore. Approval can be given only for transactions whose values are below 1 crore. So next point under disclosure on other matters we have is accounting treatment disclosure. First was the related party transactions. Second that we are covering over here is accounting treatment disclosures. Accounting treatment disclosures. Okay, so in case of deviation from accounting standard, whether following disclosures have been made or not. This is only in case of deviation from AS. Deviation from accounting standard. The following things, the following disclosures have been made or not, that is the reason for deviation, effect of deviation, and the impact due to such deviation, So that was all about clause 49 of listing agreement. So I hope you enjoyed learning today's session. I'll see you with another video. Thank you.